There's been a lot of confusion in the entire insurance industry. People aren't really understanding how to get off the FAIR plan, how to get reinsured. And that's kind of what we're going to talk about a little bit today. This is going to be a little bit more of a long form video. And please be encouraged, comments below, ask us questions. Also, we're gonna link our information on here. Feel free to give us a call as well. I think the first thing is understanding fire mitigation and how it pertains to insurance.
I would say that the confusion is just not by, the homeowners. If you really look into some of what the insurance commissioner has proposed, they want to make sure that the primary insureds are covering certain blocks and having an 85% plus increase. But in doing so, right, they're just looking at the numbers rather than the mitigation.
What you have to understand is that insurance carriers, they look at risk, right? And we kind of come at this at a point to where we can start mitigating some of that risk. And we started working with MGAs, and they are starting to agree with us. And, they're also setting their own guidelines in the insurance industry, which is, kind of giving us more of a clear path of either getting you off the FAIR plan, getting rid of that supplemental insurance, back with a normal carrier, or in some cases, even seeing a massive reduction when your homes are valued at $4 million or higher.
There's risks that are exposed everywhere. Well, what's happening now is the assessments. The laws are saying that we have to address that and mitigate against it. We have to do our zone 0, so our 0 through 5, and some have, most haven't. So when you look at the defensible space and you look at the hardening of homes, right, they can't just take the homeowner's word for it. They have to make sure that that is being done. So the MGAs are the ones that are dealing with bigger blocks of business, and the underwriters are relying on them because they're putting together these specialty programs. The coverage can be bound because we're going into the specific property. With that, when you look and see and assess, is you're going in, you're doing an initial assessment, right? They
Yep.
want the initial being done, and that is defensible space and hardening. And we go in and we do the actual work, the hardening. Once the assessments are done, we go through, the checklists are there, and then you gotta finish the checklist, right? Because everything has to be checked off in order to be now underwritten and get off California FAIR, which we'll talk about in a second, and back over to a primary insured with maximum coverage. This is for the realtors out there. This is really important. Our network has produced a couple insurance programs that you can help your clients right now today. I'm telling, some people out there, and don't take this the right way or the wrong way. And the smaller homes, we're really probably not going to be the fit. And it's not us. We'll install systems on everything. But specifically, if you're looking for an insurance break on this, or a home that's on California FAIR and specifically over $4 million in value, there are programs out there right now. We can do soft quotes and get people off of the FAIR. With this particular company, it's a 43% success rate to get them off of FAIR today. There's still policies that are going to be issued, could be much higher than that.
So when you're looking at homes that are 4 million plus, we can insure, and for the realtors, when you're going to sell that home, we can give them an insurance policy that is transferable to the new buyer. Now, when I say transferable, the policy isn't transferring, it's staying with the home. The new buyer can assume that policy to where they don't have to shop around for insurance anymore. We've been hearing a lot from real estate agents, and they're all saying, start getting a soft quote on what your insurance would look like before you submit an offer. Well, this kind of cuts that out. The home buyer is going to know exactly what their insurance is going to be before they even submit an offer, and it's all going to be transparent. That's the thing that they're really doing that's kind of changing the game. So when you start looking at these homes, that's going to be the main ticket right there. And let's kind of talk about the assessments a little bit. There's a lot of confusion on what's plausible, what's not. And this is coming directly from the insurance carriers.
Let me guess, 0 through 5.
0 through 5, 100% correct. Guys, listen, it's a hard line in the sand. It is now a non-negotiable. You cannot have any combustible material within 0 to 5 feet of your home. Okay, I know that's a hard pill to swallow. Some people don't want to, and that's okay. So that means you're gonna stay on the FAIR plan and you're gonna stay in your current situation. For people who are self-insuring, then they can continue self-insuring, and then we can give them mitigation risks through either installing a wildfire system or a spray service. We have other options, we can work with that. And then next thing are going to be those trees. You cannot have branches hanging over the roof. You cannot have eucalyptus trees, Italian cypress, and pine trees.
Any conifers in general, yeah.
Conifers, pine trees. You cannot have them within 25 feet of your home. It starts getting difficult, especially let's say you have an olive tree inside of a foyer that's kind of hanging over your house a little bit. If you want to look at getting back with the main carrier, listen, my wife is Lebanese, okay? If she ever heard me say you have to kill an olive tree, I'd probably be kicked out of the house, all right? But in this instance, that olive tree has to be relocated. It doesn't necessarily have to be cut down, but it has to be moved somewhere else. Tree branches can't be within 10 feet of the home. They have to have spark arresters on the chimneys, whether it is gas or wood burning. Leaves have to getting brushed out. If you have a patio or a deck, you have to make sure that you're cleaning out underneath that deck of all of debris. And then we have to come in and install Ember mesh around the bottom of the deck to make sure that nothing else gets in there and that no embers fly in as well. So there's a lot of things that kind of start going down this checklist, but once you start hitting everything in this checklist, it leaves you open to a lot more options when it comes to getting reinsured and back on with the main carrier.
So on the point of, to cut or not to cut, to replace and clear 0 through 5 or not, there's a very famous actor that has ivy all over their house. They got more money than God, right? They don't care about their insurance. They really don't. It doesn't matter to them if they pay an extra $40,000 or $50,000 a year. That's what they want. Now, the other 99.9% of us are not in that position. So we have to abide by what the insurance carriers are demanding and is state law.
So when you start looking at this, we have ways to where, we do have a spray service where we can come out and we use an EPA approved product called Citrotech to where we spray it out along the area. It lasts for up to 6 months. For some houses, we like to come out 3 times a year to make sure we have a good overlap, especially if you're out there in that high fire area. And then when you do a combination of a wildfire defense system that's mounted on the home that's going to spray out, up to 50 feet and covering the property, you have that as one avenue. And then you have the spray service combined with that. And for some of the people who are in the $5 to $20 million homes, some of their insurance policies range from $80,000 to $200,000 a year. Right. And they're quoting that at about 3% of the home value. If we're able to get that 3% down to 1%, and that includes our service package, the big benefit to those types of customers is that they see an ROI on fire mitigation on year 1.
That is something, even with great wealth, people will notice. This, as Ryan described this system, is absolutely bringing these premiums down to an affordable rate where peace of mind then comes in. Okay, now I have the peace of mind again to protect my big asset.
Let's talk a little bit more about the FAIR plan. And
you mean the unfair plan in California, the not so fair plan?
You're covered up to $3 million for the FAIR plan, and then you have a supplemental insurance, but they might only pay out $900,000. And they're quoting rebuilds at about $325 a square foot. In the current climate right now, especially if you have an upgraded interior as far as granite countertops and fixtures and higher end appliances, those things might not be covered, because when you start looking at the building costs for those, you start hitting the $400 to $500 range. So you're already kind of starting at a disadvantage. Jim, you want to talk a little bit about the displacement and replacement costs? And because you did a really good article that you wrote and a case study.
For the example, I'm just going to point back to the one, we can just go to our website. There's a blog on this, and it was just to cite that blog, it was a $6 million home. So FAIR would pay 3. The replacement you hit on, so I don't want to beat on that one too much, but displacement, I don't know if people really account for that. If neighborhoods were to go up, those houses are not going to be rebuilt for a couple of years. And if anyone thinks that they're going to be built quicker, I don't know what to tell you, right? So now you're out of your home for 2 years. At what cost? Now, there are some mechanisms the state has put in place so people cannot be gouged and what have you, but that's not going to go on forever.
Yeah, but one thing on that, Jim, there's also loopholes associated with that. And so people start learning the loopholes, and then the gouging starts all coming back again. Yeah. So to really kind of touch on it is that, you're out of your home for 2 years. And so normally the mortgage companies, they give you like a 90-day furlough, basically on paying your mortgage. I mean, that's great, but after 90 days, you're back to paying a mortgage for a home that is basically just a lot at this point. Now you're renting an apartment and that you have to furnish. The pennies add up in these cases. And so now you're paying for all of this with an apartment, and then you're paying for your home that you can't live in, and you're really stuck in a really tough spot.
I'll give you a number.
Give me a number.
On that $6 million, right? Now, 5 years ago, if you were to look at that under regular insurance, right, without being on the FAIR plan, your house would have burned down and be like, okay, I'm going to replace my home, my contents, and it's going to take me a little bit of time to be displaced. And today, that loss is $5.15 million. Look at the blog, it'll take 2 seconds. You can see it's not just your home that you're losing.
So that kind of pretty much sums everything up. Listen guys, if you have questions, click the link below, give us a call or leave a comment down and we'll get back to you and answer it to our best of our abilities. Just know that every situation is unique. I wish there was a playbook to where I could tell you if you had X plus Y, it's always going to equal Z, but that's not really the case right now. Reach out to us and see if your clients or yourself could be a really good fit for one of our programs and get you back with a main carrier and get off the California Not So Fair plan.